Okay, so hello guys, and in today's session, we have a question of Mar-Jun 2023 attempt called TROT Company. So I'm reading the question, please follow. TROT Company is an owner-managed travel company. So it's a travel company operating in the country of VLAN where the domestic currency is VLAN dollar. So it's a travel company. You should be sure in the question what type of business company is doing to be able to perform better in calculations and discussion. So it's a travel company in VLAN, currency is VLAN dollar. It offers range of package holidays to customers, and the holiday price it charges to customers includes flights, transfers to and from resorts, and accommodation costs. So it offers range of package holidays. Holiday price it charges to customers include flights, okay, transfers, to and from resorts and accommodation. So the package they are offering to customer, they include the flights, the airplane flights, the transfers to and from resorts or hotels, pick and drop from hotels, and accommodation costs. Like you go on a tour in some country, this company is offering you flights to that country, pick and drop from the resort, hotel, and accommodation. Accommodation means living cost, hotel cost. Market is extremely competitive. Until recently, the company only offered holidays to Europe. However, following a consistent 5% annual decline in European holiday market over the last 2 years, TROT decided to extend its coverage to North America from beginning of 2007. Flights to North America from VLAN are longer than flights to Europe from VLAN. Okay. Now, 5% decline is there in the European holiday market. So TROT decided to extend coverage to North America from 2007. North American flights from VLAN country are longer than Europe. It is now the end of 2007 and following information is available. It is now end of 2007. At the beginning of 2007, following company's expansion into North America, TROT company made an arrangement with a North American television station to place an advert every month. Each advert costs VLAN $600. At the same time, TROT reduced its level of advertising in VLAN. So you reduce your advertisement in VLAN, and you made an arrangement with a North American television station to produce advert every month. Each advert costs $600. 6 months ago, political unrest in VLAN caused the VLAN dollar to fall in value by an average of 25% against all currencies. TROT pays for all flights immediately when the customer makes booking in VLAN dollar. So political unrest was there in VLAN, your home country, and your dollar fell against other currencies. TROT pays for all flights immediately when customer makes a booking. You pay all the flights when customer makes a booking. During there, it also began using a new booking agent for flights who promised more competitive price. Customers usually book their holidays at least 6 months in advance of their departure and are required to pay for the holidays in full at the time of booking in VLAN dollar. Cost on accommodation and transfers are always paid by TROT in the currency of the country being visited, and these costs are paid once the customer's holidays is complete. Okay, now pay attention to this. TROT pays for flights immediately when customer makes a booking in VLAN dollar. So when the customer makes a booking, you immediately pay for flights. But in this paragraph, it states you use a new booking agent. Okay. Customers book their holidays 6 months in advance and they deposit their full amount with the booking in VLAN dollar to TROT company. But the costs of accommodation and transfers are paid by TROT in the currency of the country being visited. These costs are paid when holiday is complete. Okay, so pay attention. If a customer is traveling through my country, Pakistan, if a customer is traveling to my country, if a customer is traveling from my country, Pakistan, okay, customers come to me, okay, they book holiday package, pay to me in Pakistani rupees, okay. I pay for the flights immediately, okay. I pay for the flights immediately in VLAN dollar in my currency. But I take the booking fees from customers now. But I pay the accommodation and the traveling cost. I'm sorry, I have to repeat this thing due to some network difficulty. Now, the thing is that it says that TROT pays for all flights immediately when customer makes a booking in VLAN dollar. During there, it began using a new booking agent. Customers book holidays 6 months in advance, pay in full at the time of booking in VLAN dollar. Accommodation and transfers costs are paid by TROT in the currency of the country being visited. These costs are paid once customers' holidays complete. Like, pay attention. For example, I am a travel company in Pakistan. Customers book holidays with me 6 months in advance. They pay me full amount in PKR. Okay, Pakistani rupees. I pay for the flights immediately in PKR. But if customer visiting USA, if customer visiting in UAE for hotel accommodation and transfers, okay, I pay them not in PKR, but in the currency of country being visited, like dollars and dirhams. And these costs are paid once holiday is complete. So pay attention. I am taking money 6 months before in VLAN dollar, in Pakistani rupees, for example, paying for the flights immediately, keeping money for 6 months, then paying them that money for transfers and accommodation to hotels in the currency of their country. Once visit is complete after 6 months, for 6 months, I have to keep money in my local currency. And due to political unrest, if the currency falls, I bear loss. Okay. Midway through 2007, one of TROT's employees was awarded a VLAN $22,000 compensation payment after a court decided she was unfairly dismissed. All remaining staff were given a 10% pay rise with immediate effect in an attempt to reassure them. So in 2007, midway, one of TROT's employees was awarded $22,000 VLAN compensation after a court decided she was unfairly dismissed. All staff were given a 10% pay rise. TROT is financed partly by medium-term loans. One of the loans came to an end 3 months ago, and the company therefore had to renegotiate a new loan. The new loan incurred a $3,000 finance fee and a higher interest rate than the old one. The new loan also covered the purchase of new $1 computerized billing system, which was expected to reduce admin costs by 50%. So all this is happening in 2007, staff dismissal, new booking agent used. Now loan came to an end 3 months ago. We have to negotiate a new loan. It had a $3,000 finance fees, higher interest rate. It covered purchase of 2,000 computerized billing system, which will reduce admin cost by 50%. Results of TROT for the last 2 years. Revenue is given from European region, 2006. And in 2007, North American region wasn't there, but now it's grown to 56. Total revenue is increasing as cost of sales, flights increasing, accommodation increasing, transfers increasing. So total cost increasing. The gross profit is 192, 149, 760. Rent, same almost. Salaries increasing slightly. Advertisement costs increasing by a huge amount because you had launched a new American market. Admin cost decreasing, finance cost increasing, miscellaneous increasing too much. Net profit 77,700 and now loss. The owner of TROT has looked at 2007 results and is extremely disappointed. Having seen the business has made a loss, he feels like the whole expansion into North America was a bad idea. So after seeing loss, he's saying that North American expansion was a bad idea. Okay. Now 20 marks, discuss performance of TROT for 2007, 6 marks for calculations, 14 marks for discussion, 20 marks. Very good question. 6 marks for calculation. Remember 12 ratios. I will compute 12 ratios, then write the discussion. Okay, let's start. Okay, now it's important to have a quick recap of the question. I have the financial statements for 2006 and 2007 showing revenue, North American costs, revenue, cost of sales, flights, accommodation, transfers, gross profit, then expenses, then net profit. But otherwise, in the above statement, there was a lot of information which I must take care of. It's a travel company operating in VLAN, domestic currency dollars, range of packages, holiday price includes what flights, includes transfer, and includes resort and accommodation costs as well, right? Market is competitive. Company only offered or European market, but if there is 5% decline in European market, TROT decided to go to North American market and flights are longer. 2007 end, following information is available. You entered into North America, made an arrangement with television there to advertisement each month. And each is costing 600, and you reduce your advertising in VLAN. Political unrest resulted in fall in your currency. Okay, and you pay for flights and everything immediately when the customer makes a booking in VLAN dollar. Okay, so you immediately are saying that you pay all these flights immediately when customer makes a booking, right? Then after that, you use the new booking agent. Customers book their holiday 6 months in advance, pay you full amount, but one important thing, that costs of accommodation and transfers you pay in the country being visited, currency of the country being visited, once holiday is complete. So for 6 months, customers' money is with you in local currency. So I must have this thing in mind that my currency has fallen. It will become a loss source for me because I receive money in Vietnam dollars and I have to pay in other currencies. One of your employees was awarded a compensation of 22,000 and you increased pay rise and your loan came to an end. You had to go towards a new loan, which had some extra charges attached. Okay. And together with this, you expected a new billing system as well, and loan interest was also higher, but this is going to reduce admin cost by 50%. So you have to discuss performance for 2007, although it's basically falling, the performance is falling. But the thing is that our owner has been very disappointed and he feels that it was a bad idea. Okay, so for calculations first, you have 6 marks, 12 ratios. Okay, and you all know how to handle these type of questions. Okay, where commentary and calculations gives you marks. Okay, let's start. So growth in revenue, growth in GP, growth, or you can say decline in NP. Okay, and you can get gross profit margin for each year. Okay, it's your choice, not obligation. Then increase in flight cost, increase in accommodation cost, increase in transfer cost, because for package you are offering all-inclusive package, flights, accommodation, living, and hotels, and transfers from resorts as well. Increase in rent, increase in salaries. Okay, increase in advertisement, fall in admin, and I will write one or two more. I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So finance and miscellaneous are also relevant points. So let's find growth in revenue first. Difference over base, so revenue 640 to 768. 138 has been the rise. 128, sorry. 20%. Growth in gross profit. It's in fact, I think falling. Yeah, it's fallen. 192,000 minus 149,760. 192,000. 22%. Net profit is also declining. 77,700 to 12,000 loss. Okay, that means it has declined by approximately 89,700, 77,700, and then 12,000 more. 89,700 divided by 77,700, 115% increase in flight cost. Okay. So take the difference of flights, 138,240 minus 128,000 divided by 128,000, 8%. Increase in accommodation cost, 384 minus 256, 50%. Increase in transfer cost, 50%. Okay. Rent, 2%. Salaries, 5%. Advertisement, 50%. Fall in admin cost, 1,400 divided by 14,000, 10%. Then we have increase in finance cost, 12960 minus 8,100 divided by 8,100, 60%. And finally, we have increase in miscellaneous. Very percent, 300%, I'm sorry. Okay, so these are the calculations, and I want you all to firstly deal with this, because these are 12 ratios, I think. So you can get good marks through them. And once you have these things, then I think we will be in a better position to comment on them. So 6 marks are done, right? 12 ratios in total. Okay. Okay, please copy these 12 ratios, then I will continue the commentary, okay? Okay, now we have to write the commentary as well. And in commentary, we firstly write the company's turnover has grown by 20%, which is a good sign. However, growth in turnover of 20% should have resulted in growth in gross profit of 20%, but gross profit has declined by 22%, indicating severe weaknesses in cost control, and company has to focus on costs to improve profitability. Okay, but I want to talk about revenue further. If we check breakdown of revenue, we find that North American new venture revenue was a good start, and it was not a failure. The problem is that the European area revenue has declined by 20%. This is the main problem area, as European holiday market only fell by 5%, but companies' revenue declined by 20%, indicating poor performance in this area rather than North American area. One reason for this, obviously you have to talk more and more, is that company reduced its advertisement in European market, which could have affected it. Okay, it was written company reduced its advertisement, so this can have an impact on this. Okay, so we talked about growth in revenue and declining gross profit. Okay, then we can talk about decline in NP. Company's net profit margin has fallen by 115%. And in fact, company has ended up in loss in 2007. This indicates significant rise and expenses that need to be focused upon. Okay, obviously we will focus them as well. So we have to now talk about the increase in flight cost, accommodation cost, and transfer cost. As far as cost control is concerned, the flight costs rose by 8%, but accommodation and transfer cost rose by 50%. This means accommodation and transfer has become more expensive. Okay, so I told you increase decrease must be supported by reason or recommendation. As I told you in class, ratio calculate increase decrease reason recommendation. Okay, so one reason for this may be fall in exchange rates, as TROT's currency fell by 25% compared to other currencies, and TROT has to pay accommodation and transfer in the country of currency being visited. So it is costing more. If the Pakistani rupee collapses, right, falls 25% against dollar, and I have to pay someone in dollar, it will cost me more. You have to pay your ACCA fees in pounds, it will cost you more. So this company has to pay accommodation and transfer cost in the country being visited. So since their currency has fallen, this was definitely going to cost them more. Okay. So I have talked about growth in revenue, growth in GP, NP, accommodation, flight, and transfer. Okay. To talk about other things as well. Okay, so I want you all to first copy this, then we will talk about other things like rent, advertisement, finance, miscellaneous. Please copy this. Okay, now we have to talk about rent. Rent has increased slightly by 2%. It doesn't seem that TROT has taken any additional space for North American area. So it might be just a routine incremental impact. Year on year, the rent increases. So it isn't changing by too much, as we can say that they have gone a new space for the North American venture. It just seems to be a slight incremental impact. Okay. Advertising cost has overall increased by 50%. This is only due to new advertisement of North American business, whereas European business advertising cost is decreasing. Okay. Even if you want, you can do one extra calculation here that advertisement costs are 15,300. You have basically done new advertisement at the rate of 600, right? 600 per advertisement and every month. So 7,200 is just for this new venture. So if you remove 7,200 from this, the advertisement cost for the European business is falling. Okay. To further elaborate this is not required at all. I'm just writing to explain you. Elaborate. Advertising cost of 600 per month into 12 advertisements. It was per month, so 12 months in a year. 7,200 out of this 15,300 spent in 2007 is for new area, North American area. If we deduct it from 15,300, we can clearly see advertisement cost for a European business falling. Okay. I think only miscellaneous finance cost and salaries are left. Salaries have increased by 5%, mainly due to immediate pay rise given to employees. Admin cost has fallen by 10%. 10%. The reason may be new software which was installed and was expected to reduce admin cost has started yielding results. Okay, the new software which you installed. And remember, you initially planned that this will reduce admin cost by 50%, so it has started giving results. So you can write these points as well. Then I have two more points to discuss, the miscellaneous and finance cost. Then I will end my solution. So please copy this. Okay, I hope you have copied. Now we have two more things to discuss: the finance cost increase and miscellaneous increase. The finance cost has increased by 60%, meaning more interest needs to be paid, and this has led to decline in profitability. The reason for this is clear. The new loan acquired is carrying a very high interest rate, and company should try to arrange cheaper finance to improve profitability. See, it was clearly mentioned. Higher interest rate. Okay. And so as miscellaneous cost has increased by 300%, I think. Yeah. Okay, although no information is provided about miscellaneous cost increase, which has increased by 300%, but it seems, I'm not sure, I can just comment on what my opinion is, but it seems that, remember, one penalty needed to be paid of 22,000 compensation payment. That is the main result company may have included in miscellaneous cost. Since it is unlikely to come again, this will have a positive impact on future profitability. Now I've commented on everything, but don't just rush away. Remember, I told you to always give the conclusion. Okay, I told you to always give the conclusion, because we have done things, but we need to now go towards a conclusion. We have commented on all ratios. We now need to mention a conclusion. What is the overall performance? Although overall results are indeed disappointing, as stated by TROT's owner, but nowhere the North American expansion is creating these bad results. Expansion must be continued, and European, area needs to be improved further. Okay, performance is bad, but this is not because of North American expansion as stated by the owner. We've cleared the facts that it's due to European business. Okay, you can copy and leave. Hope you understood this question.